I always say I don't know where we go, if it's 5,000 or 4,000 or 3,000 or 8,000. I don't care.
Yeah.
We will be in in a bull market. We started our fund very in 2008. It was the top of the last cycle for commodities. We've been in the bear market actually almost 15 years. A bull market, new bull market has just started. Gold breaking out this 4-year channel between 1700 and 2100. So we see the start of the third major leg up for gold. The first leg was in the 1970s. The second was after the millennium. Now we see the start of a new third wave. Gold is following this parabolic move. Silver will break 50 after a short correction.
Gold prices have surged dramatically recently, experiencing a remarkable 20% increase within 2 months. This surge has nearly doubled the precious metal's value since the pre-pandemic era, when it traded at around $1,500. With yesterday's closing price surpassing $2,400, gold's ascent has been noteworthy. The bullish trajectory of gold has been partially restrained by hawkish comments from Federal Reserve officials, suggesting a potential cap on its upward momentum. However, escalating tensions in the Middle East have contributed to a renewed interest in safe haven assets, such as gold. Willem Middelkoop, renowned author of The Big Reset and founder of the Commodity Discovery Fund, views the current trend as indicative of a bull market for gold, regardless of whether it reaches $3,000 or $4,000 or even higher. Middelkoop also sees significant potential for silver to rise, potentially returning to levels around $40 or $50. The rise of gold has not gone unnoticed by geopolitical players such as Russia and the BRICS nations, who are eyeing its growing momentum as a potential backing for their new currency initiatives. Concurrently, as the US dollar continues its gradual decline, more countries, including the US itself, are turning to gold as a global reserve asset. This heightened demand underscores the increasing value of the precious metal and sets the stage for a potential standoff between BRICS and the US dollar. Middelkoop emphasizes that the rise of BRICS countries has led to the weaponization of gold and silver as part of an anti-dollar trade strategy. This shift in global economic dynamics may result in a significant flow of physical metals from west to east, reflecting broader geopolitical tensions. Come along as we explore the valuable insights provided by Willem Middelkoop. Don't miss out on our latest updates. Subscribe to our channel and activate notifications. Thank you for tuning in.
We all know precious metals, especially gold and silver, are manipulated, or you could say managed. Depends what side of the spectrum you are. But we've seen a huge run for silver in 1980 when they tried to corner the market, and that showed how small this market is, how easy you could corner this market. There were the Hunt brothers, and then they changed the game overnight at the COMEX, and then the Hunt brothers were scared away. We've seen Warren Buffett invest in gold in the 1990s, but I think they told Warren, stay out of that market. He never touched silver again. Then we saw a huge jump in around to 2010, 2011. I really enjoyed that move towards $50. I played it with futures,
Wow.
and that made me quite a bit of money. And then we saw another huge phase of manipulation, and they brought it all back to $10. And I think the physical demand out there is just incredible. I just saw some stats, some graphs of Indian imports, silver imports, Turkish silver imports. I can send them to you, and that's a real strong demand. And don't forget that the dollar has been weaponized, but
Yeah.
gold and silver are being weaponized now as well by the BRICS countries. I'm quite sure that they do understand that this is the anti-dollar trade, and I think a lot of physical is flowing from west to east. This has been happening for years, has been ongoing for years, but now it might get very serious, especially with all these wars ongoing. Well, during presentations, I always show this graph of central bank selling physical gold up to the Lehman crisis, the Lehman Brothers event in 2008. And I always tell the audience there's an era before Lehman and there's an era after Lehman, the Lehman crash. And
Right.
we've seen central banks starting to buy physical gold again from 2009 onwards. But the last 2 years, we really saw an acceleration of that trade, strong accumulation of physical gold, even in European countries like Poland or Czechia. And that's telling. So a lot of physical gold buying, and I think the market is about to go in a reset mode. Don't forget the J.P. Morgan top guys went to Shanghai to discuss precious metals with their Shanghai gold exchange
Really?
partners. Mrs. Yellen traveled to China twice this year
Yeah.
to discuss monetary affairs, put it that way. And it's very telling that the Chinese are not traveling to the US. The US guys and girls are traveling to China. So who's the master here?
Middelkoop asserts that gold's recent breakout from a 4-year channel, ranging between $1,700 and $2,100, signals the onset of a new upward cycle reminiscent of significant surges witnessed in the 1970s and post-millennium periods. According to a report by FX Street, Wall Street analysts are scrambling to revise their gold price targets upwards. Goldman Sachs predicts a target of $2,700, Bank of America forecasts $3,000 by next year, and UBS suggests a potential rise to $4,000 within the next 2 to 3 years. Such projections imply a near tripling of gold prices, constituting the most significant rally since the 2008 financial crisis. Despite acknowledging persistent manipulation in the market, mainly through futures trading, Middelkoop remains optimistic that manipulation will eventually cease, allowing the market to reflect the actual value of precious metals. Meanwhile, the Vietnam National Assembly Standing Committee has urged the government and the Prime Minister to investigate gold trading firms to promptly address any violations in business activities and potential market manipulation amid soaring domestic gold prices. Let's get back to the interview.
I always say I don't know where we go, if it's 5,000 or 4,000 or 3,000 or 8,000. I don't care.
Yeah.
We will be in a bull market. We started our fund, very unfortunately, in 2008. It was the top of the last cycle for commodities. We've been in the bear market actually for almost 15 years. A new bull market has just started with gold breaking out this 4-year channel between 1,700 and 2,100. So we see the start of the third major leg up for gold. The first leg was in the 1970s. The second was after the millennium. And now we see the start of a new third wave. And gold is following this parabolic move, which started from the 1970s. Look at the larger picture.
Yeah.
And I think there's a lot of room to run. There's no resistance overhead, and silver will be able to travel back to 40 and 50. And then people will say, oh, triple top, we need to sell everything. And then silver will break 50 after a short correction, probably.
Yeah.
And then it might run much higher, and everybody will be so surprised. Watch the charts. We see them painting the tape. We see the selling, the waves of selling with futures. And the impact of the selling is getting less and less severe.
Really?
So I think the buyers out there, the physical buyers, are enjoying these attacks. And one day, all manipulation ends in the end. So in the end, it will be upside only. When you look at the fundamentals, how can silver be 40% lower than the 1980 high?
Yeah, it doesn't make sense.
No.
Yeah, it doesn't make any sense.
So the Middelkoop family has accumulated quite a bit of physical silver, much more than physical gold. It's no surprise that banks like Citibank, Citigroup are calling for $3,000 gold now, because
Wow.
they see what's happening. So it's not the gold bucks and the silver bucks making these calls now. It's Wall Street. And I think in 12 to 18 months, when we look back, we will say, well, a lot has changed. And for us as investors, we have a commodity fund, we're commodity investors. 50% of our investments is precious metals related. The other half is battery metals related.
Iran and Israel seem to have stepped back from the brink of a broader conflict as lawmakers in the U.S. approved new Israeli military aid on Saturday. However, investors will monitor the developments surrounding the Middle East conflict. Rising tension in the region could boost the gold price and traditional safe haven assets. Share your perspective in the comments below. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.